Perhaps while we're sorting out the tech, I'll do a brief introduction to our panel. We are here talking about investment opportunities in Southeastern Europe. We will give a state of the market for 2019. We've got a very distinguished panel today with, by my calculation, a cumulative investment experience in the region of more than 80 years. So introducing the panel, I'm Rob Irving. I'm the global co-chair of the global private equity practice of Dentons, the world's largest law firm. To my right here, I've got Dan Farcasanu. He's the country director, Romania at Resource Partners, one of the leading private equity firms focused on Central and Eastern Europe. To Dan's right, we've got Alex Nagle, the managing partner for Austria and Central and Eastern Europe of ALANTRA, which is a truly global leader in the M&A bid market advisory. And then finally, most of you in the room will probably know Elvin Guri. He's the CEO of Empower Capital, a leading private equity firm focused on Bulgaria. He's also an investor in his personal capacity. He's been an entrepreneur and investor in his personal capacity throughout the region. So without further ado, we'll start the questions. And I'll start with Elvin. Empower Capital is nearing the end of its investment period. And like most funds at this stage, I'm sure that you're sounding out potential investors as to potentially a new fund, gauging their interest and giving them your pitch on the region. Can you start us off with your pitch on why investors should be investing in this region?
It's a loaded question. Maybe it's worth exploring first the challenges that one faces when introducing the region and the particular market in which we're operating. I think it's incorrect to speak of a region or a regional market. It's probably one of the first mistakes that people did 20 years ago when they started investing. Each of these countries has certain specifics, certain characteristics that, starting from language, which makes it very difficult to consider them as one whole market. We are already witnesses of the fact that Central and Eastern Europe as such has already diverged. We have Central Europe with Poland and Hungary and Czech Republic that are basically now being invested in from the Western European allocations of most funds. And we have Southeast Europe that, with its full markets, represents a number of challenges for most investors, from political and legal environment on one hand, to the fact that there are small companies that are still growing, that there is lack of sophistication of the local markets, and so on. So, when I meet those few investors that are willing to pay attention to what we have to say for the region, I try to speak about the fact that, first and foremost, it's not about convergence or regional potential. It is about ability to operate as an investor locally in each market of interest, both in terms of local presence, in terms of local track record, and experience. So we have fashioned our pitch and our strategy to speak about a team of managers that have a local track record in each of the markets in which we want to operate. We have experience and we have presence. We speak about ability to operate and to be operationally involved in the companies in which we invest, which for small companies, it's even more important. But we also speak about the potential insofar as that in the market in which we would like to invest, which is equity tickets of up to 10 million euros, there's virtually no one that is trying to do this on a systematic basis. A bit long-winded answers, but
maybe I'll segue to Dan.
Yes.
Your fund on this theme of the region and the region dominated by Poland. Your fund has been extraordinarily successful investing in Poland.
Yes.
Then you seem like a little bit of an outlier, based in Bucharest and focused on investments in Romania and Southeastern Europe. How do the investors in your fund view this, and how does your fund view this for investing in Romania or Southeastern Europe generally? Do you have higher expectations or different expectations than Poland?
So first of all, it's true that we have to invest a certain portion of our fund in Poland. This is kind of a given, and we are successful in Poland. On the other hand, we are nevertheless Central and Eastern Europe investors, so we look at each market, with one exception, the Czech Republic. And we don't have a sort of, double standards. So what we are expecting from Poland, we are expecting more from Romania, Bulgaria, and the Baltics. We are looking at each company and assess the opportunity based on its own merits, pretty much. We are growth investors, so we need to understand the fundamentals for growth in the end. We have, apart from Poland, we have one investment in Baltics and one investment in Romania. I'm directly responsible for the investment in Romania. In Romania, for example, we are very successful. In 4.5 years, 5 years, let's say, we increased the business 4 times, because it was about, again, convergence to Western Europe. It was about growth opportunity. When we entered, we saw big unexploited market, and we simply had to execute our business plan. So in the end, I would say that whether it's Romania, Bulgaria, Slovenia, it's simply about the company itself, and it has the ability to make money for us.
And would you agree with Elvin that it helps to be on the ground?
Absolutely.
In a particular country?
Absolutely. It's very important, and it's much useful because it gives you the insight on a deal and the feedback, so you can, to have an edge versus your competition. And I would also like to add one particular thing. Poland is an attractive market, but it's much more competitive in terms of, buyers vis-a-vis Southeastern Europe, like Romania or Bulgaria, where you could find good companies at probably lower valuation than in Poland, because the sellers' universe, it's not that big.
Alex, you have a long history when we're talking about buyers, as Dan has in the region. You have a long history in the region, working with bringing in an awful lot of very reputable buyers. How have investors' perceptions of Southeastern Europe changed through the years, if we think of it as a region or if we think of it as particular countries? Has there been a change? Have the investments in recent years by the likes of Heineken or Spadel or BC Partners, is there a new class of investor coming to Southeastern Europe?
There's a lot of questions in that question. But maybe to pick up on some of the themes, and I think you also expressed it very well, and as did you. I think that investors really see the countries in Eastern Europe in a very granular way now. That may have been a little bit different in the past, I mean, when I started working on M&A in the region in the 90s, you were also in a completely different information environment. We didn't have virtual data rooms. We didn't have the idea of EDD reports. It was really a challenge for investors, especially I would say for private equity, to have a real transparency of what is available in the information. That's something that's really changed very, very dramatically, and which I think enables also very much players like Elvin or Dan to have a much more effective approach to a range of also smaller situations in the markets in a very systematic way. So I think that, you know, just it's been in some ways a technology change and a change in the way M&A is done in general over the last few decades that creates a lot of opportunity for investors who you know, who know what they're good at and who are looking for smaller situations to enter the market and to, you know, provide to providers of capital a credible story around we're really kind of good on a very focused area, for example, in the consumer space more broadly speaking, or in your case more in the tech space or fintech space. You mentioned some other names about some investors that we've seen in the, you know, do investments in the region recently, Heineken, Spadel, BC Partners. I mean, actually, I mean, Heineken is not such a new player in the region. I think it was, you know, they were, I think, a very early investor in Bulgaria, in fact, with Saporka. As far as I remember, that they invested in Saporka a very long time ago. I think for them, it was a matter of the right opportunity coming up because there were not a lot of breweries of scale still available for sale in the region. You're talking about the Lashko deal. I think Spadel is an interesting case because I think it also just goes to show that private equity involvement in Southeastern Europe does attract new investors from Western Europe in the mid-cap space because they prepare the companies in a way that makes them simply a safer bet, a more transparent, you know, investment thesis for those mid-cap players. So I think that creates a kind of virtuous cycle. And then BC Partners, your third example, obviously, you know, I think that a lot of the big European PE players actually have been watching different opportunities in Southeastern Europe, not only Poland for quite some time, but there just aren't that many of relevant scale for some of those players. But also PE involvement, it's part of a story of building that scale where someone invests with a small ticket, you know, they build the company, they sell to a PE that then does maybe a larger deal size, the story grows, and then you have a situation like BC's investment into United Group in Serbia and Slovenia. So, yeah.
As a matter of fact, the latest data from Invest Europe suggests that while strategic sales or acquisitions continue to be the most important part of the M&A transactions, secondaries, in other words, sales from PE sponsors to PE sponsors, are also have increased considerably during the past couple of years, which on one hand suggests that there is increased PE involvement and there is interest, but there is also a pipeline that is being created by other funds, something that has been missing in the past.
Yeah, if I can just give an example, here in Romania, the market leader in healthcare has been the subject of 3 secondaries, from one fund to the other. Okay, so, and recently, one of the main players in retail, again, it was sold in a secondary transaction, and probably the next buyer will be also fund. So secondaries are on the rise all over Eastern Europe. And we are also buying. We also bought one of our portfolio company. We bought it from a fund in Poland, and we sold it to another fund in Central Europe. So this is really happening.
I'd like to pick up on one theme which Alex mentioned. Elvin, Alex mentioned the proliferation of technology to make information available in M&A processes. do you find you're operating, as particularly as you mentioned in the smaller transactions, do you find operating in the lower mid-market that enough sellers are prepared to invest in that technology and make it available to make your life easier as an investor?
It's one of the challenges of our work. The short answer is no. But there are some nuances to it. And the nuances relate to the sophistication of the potential the target companies. Generally, if someone is not prepared to go through the minimum expense of hiring proper advisors, or accepting that there are there's a certain framework of doing deals with funds or with outside strategic buyers, from the choice of legislation, which as a rule has been in UK law for the whole region for the past 25 years, to the fact that you need to hire proper advisors, you need to have a certain package, you need to have a certain standard of reporting. If they're not prepared to go this far, chances are you're not going to reach a deal. Now, having said that, we also come across increasingly operators, businesses that have very sound business, that acknowledge the challenge of growth. They do not know how to go about facing it. So it takes us a bit of time to get them comfortable with us, with the idea of getting involved in private equity, but also with what it takes to go through the process. Generally, they come to us with their legal advisor, who has helped them with their commercial arrangements. And we tell them, no, you have to have an M&A advisor, and it's actually good for you.
Can I thank you for saying that?
So yes, it's a challenge. It really is.
But keep the deal for time. Don't go in a pitch. So.
It also means that the lead time to get to a deal, especially in the lower middle market, is longer. There is a process of education and getting people to feel comfortable with you, but also you to feel comfortable with them. I recently met a company that has a fantastic business. They would like to grow. 4 partners that have survived 23 years together. I wanted to shake their hands because they have gone through a lot. But being 4 partners, they also understand what it means to have partners. They already have established a mechanism, a dynamic of solving situations, of resolving disagreements. So it's not strange to them when I say, we need to take some time together so that you understand also the way that we operate. These are rare, but you have them.
Dan, it's been my impression in Romania that perhaps entrepreneurs are a little bit more prone to hire advisors, including M&A advisors, than Bulgaria or the former Yugoslavia. That there seems to be more of a tradition. Do you find it easier to do deals there? Do you find this to be the case, or what are the challenges in terms of finding and executing on deals for you?
We first of all, we have some good pipeline coming from Romania, and entrepreneurs have become to be quite sophisticated, so they kind of understand the structuring, the valuation multiples, etc. And in some cases, indeed, we've seen that they don't only take. We recently had a case with a guy who hired an advisor, and then he decided to do a BDD, and he paid with his own money, not even the company money, because he did not want. He presumably would have reflected this into the EBITDA, which we wouldn't, but he wanted to be, sure. So he just wanted to be 100% bulletproof, and he just paid with his own money. Now, this does not happen so often, but more and more we see that those entrepreneurs, they do hire advisors, And in typically our approach is we ask for exclusivity should our offer is accepted. And they started to realize this, otherwise they have to cover some cost, etc., etc. So, but indeed the market is more sophisticated than it was like, 10 years ago, something like this.
Alex, we haven't talked about the Western Balkans, where you have a fair amount of experiences as well. My impression in Slovenia and Croatia that these are very particular markets, especially right now in history. Maybe you can walk us through how you see the state of the market and the key themes.
Yeah, well, it's two interesting examples because, and it comes back to the topic of granularity of the markets being very, very different. I mean, Slovenia and Croatia are approximately very close to each other and share some common history, but Slovenia is a very, very small and relatively affluent country with a fairly dense industrial landscape and generates, for me, always a surprising amount, actually, of mid-market M&A. Of course, we all know that some of the, there's still a large role of the state in various companies, sometimes with controlling stakes, majority stakes, sometimes with minority stakes, but still the government is still playing a big role. And I think that sort of I think we can still expect out of Slovenia a lot of private M&A in kind of the mid-cap industrial space. And then still there's a lot of potential coming out of government-owned assets, for sure. Croatia is a very, very different country, much less affluent, much higher unemployment, very strong and continually booming tourism sector, although tourism growth in percentage terms is flattening, both because I think the base is higher, but also because there are now just certain infrastructure constraints in terms of beds available, and also in terms of road access and these kinds of factors, but does not have that industrial density historically. You also have, everyone knows this very specific Agricor situation, which may take some time to resolve, but which could unlock a lot of M&A in the agri to consumer space, because it's a very vertically integrated group. And also Agricor has also created some financial difficulties for some of its suppliers as well. So there's the activity where it is a little bit different in nature.
Thank you. Elvin, staying with the granularity in terms of particular countries, you stand out as somebody I know who has looked at opportunities in some of the what people might consider more exotic countries in the region, Macedonia, Albania, Kosovo. How do you find the investment climates in these countries if you were to compare them to Romania and Bulgaria, where you've invested quite a bit?
Well, depending whom you ask, I'm either brave or stupid. But as individually, I've made a choice that I live here, so I'm going to have to work here, period. Now, the way that we build our business in Bulgaria has been that we define ourselves as corporate builders. We have companies with challenges of growth. In that sense, it's been a good preparation for trying to do business in the countries of Western Balkans. The biggest challenge is how do you operate in a market where the rest of your competitors operate in the gray area, or sometimes firmly on the wrong side of the law. That is not something that we're facing for the first time. So we've seen some of that happen here. It forces you to think creatively about the kind of strategy that you're going to adopt. Most importantly, though, these small markets come across certain companies, some good companies, that have sophisticated entrepreneurs, sophisticated owners, that would like to grow organically or even through acquisitions in the region. You find them a lot in former Yugoslavia, partially because of historical links. You will find companies that are more regionally sort of present in Serbia than you would, for instance, in Bulgaria. So there is a level of sophistication there in small size or medium sized companies that you would not expect. The size of the market does not suggest it. So there are certain similarities, there are certain differences. I feel very comfortable and at home, culturally speaking. When it comes to business practices, you also realize that the smaller the market, the more important your local connections, local partnerships are. And I cannot overemphasize that.
Can I ask a question? I mean, but do you find that those smaller markets also then are much less crowded in terms of investors as well?
Yes.
Right? I mean, that must be part of the opportunity as well, as higher possibility to enter into a really bilateral discussion with someone.
The skeptics would say there's a good reason why there are no more players or bigger players there. I find that to be wrong. Yes, it's easier to engage people in bilateral discussions. It does not mean that it's easier to get to deal with them. It only means that you get easier access. You have to work really hard to get to a deal. And also because price expectations are not too different from Central Europe. Those people read the same literature that we do, the same news. So they are pretty much very aware about EBITDA levels and premia and multiples. So it's a challenge to get to a point where you find a deal that is acceptable.
I think one of the themes throughout the world these days, if we look at the U.S., if we look at Poland, Hungary, and Southeastern Europe, is the increased government intervention in who they want to see as investors and in what industries. I think we can see PPFs, the Czech firms' difficulties in acquiring Telenor Bank in Serbia, their difficulties in acquiring the media company here in Bulgaria. There are rumors about difficulties of VC partners in acquiring a United Group. Alex, what are you telling potential investors in the region before they really get stuck in too far?
I would add actually also OTP's issues with Banca Romanesca to that list.
Yes.
Well, I mean, it's an interesting and also sometimes a discouraging topic. On the other hand, I think it's also something that has a certain history in CEE, and it's a topic that unfortunately seems to be kind of gaining momentum, as you mentioned, globally and also within CEE. At the same time, there are certain sectors where considered, strategic, where there tends to be a little bit more, I would say, kind of focus on this particular topics. I think banks are also system critical. Banks tends to be one of them. Certain elements of important infrastructure assets. They've always attracted some political attention. Some of it is not so pleasant. And when the international perception is that it's not just a political agenda, but maybe there are also some very specific private business interests behind. And without going into detail, I think Hungary can maybe be a bit of an example of that. And I think that a country developing that kind of a reputation, I think that's very, very detrimental to investor interest than looking at a country. You know, on the other hand, you know, you've mentioned some prominent examples, but there's also every year lots of other examples of deals that go through and international investors that are operating successfully in countries. So unfortunately, I think it's very difficult at the beginning of a deal to say to a client, you are going to have this specific problem. It is hard to know sometimes, and unfortunately, until you get there. And that's, you know, that's just one of the risks of pursuing M&A around deals of a certain size and with a certain public visibility.
If I was, having been at the receiving end of such decisions, especially in relation to Telenor Banca, I'd say that it's partially reflects certain government policy, and I'll come back to this, but partially, or potentially also local business interest, but partially relates to lack of preparation of buyers. You have to do your groundwork, especially in regulated businesses. Regulated businesses, by definition, are political. You have to do your groundwork. You have to take the regulator spots. You have to take the politician spots. And you have to understand, down to gut feeling, whether this is something that can work. I didn't do a good job, Mr. It may be as simple as that. Now, having said that, I believe that there is something to be said about industrial policy on the part of governments, especially in some sectors where there are where you need local presence. In the small markets, I have a lot of sympathy about people that for people that say we need local strong banks with local ownership, but that's personal opinion. Having said that, also. Hungary had said a few years ago, we want the banking sector with at least 50% local ownership. I found it ironic that then they ended up being rejected for Banca for instance. So, it's not, there are gray areas, there are lots of nuances in this. Foreign investors must take that into account.
But the EU does seem to, I mean, the EU doesn't help so much in a market like Serbia yet, right? But I think that there is some evidence of EU institutions working against some of that, right? Because there's other ways besides also just antitrust, where governments can make things difficult for international operators. And I'm thinking also about even something like FMCG retail in Hungary and in Poland, and I think also some measures that have been introduced even in Romania. But it does seem, if I'm, and you're based in Hungary, that the European Commission, you know, sometimes it takes some time, but you know, they are taking action in certain cases and saying, actually, this is an infringement of certain guidelines, you're part of the EU, you actually cannot do that. And then, of course, you know, the government reconvenes and tries to pass some different law. But there is some real activity, I think, of the EU institutions to try and mitigate at least some of that. But it'll be interesting to see how it continues to play out.
Thank you. Dan, perhaps thankfully, Resource Partners doesn't focus on these key regulated industries, but more on consumer products and services. But there all of us have something that keeps us up at night. And I'm sure at Resource Partners there are things which keep you up at night. You look a bit older when I saw what are the concerns that you have generally that you're focused on these days?
So coming to the first topic, indeed, we are not doing deals related to public sector, period. So we don't touch certain sectors like, infrastructure, dealing with public municipalities, real estate, because those are clearly prone for corruption, and we don't want to be associated with. And even in the sectors like, FMCG, retail services, you need to know who your partner is. And I'm in the market, I know who we are dealing with, so I say we are kind of shielded from this type of stuff. Other than that, we are positive in general on Romania. The market is growing fast, I would say. What we see and what we are kind of preparing for the future is kind of slowdown in the overall economy. So now we are trying to change a bit the approach and look into more downside protected sectors rather than companies which are flowing with growing with the GDP growth. So we are kind of more conservative now. But I said, but I would say this is something that keeps me up at night. We are more like what is coming. And of course, we always look into what I call disruptors. So for example, we are retail investors, but the digital is kind of either altering or destroying or definitely changing retail. So we are always looking for this type of disruptors, which are, you buy a company and 5 years from now, it might be a totally different company or not a company at all. So you have to understand what are the trends for this. Okay.
Perfect. I think that's a good segue into what I think our last topic will be is 2019 and what our panel thinks will happen during the year. There are a lot of predictions of a possible slowdown, of a correction, and what effect we've heard Dan say that's not changing their appetite, it's just changing what they're focusing on. It's more disruption and counter-cyclical investments. Elvin, what are your predictions? What are your focuses for 2019?
I've become a bit pessimistic about the next 24 to 36 months. So in our current portfolio, we're pushing a lot harder on the topics such as cost control, building up on competitive advantages, whether it's technology related or strategy, but also decreasing leverage as much as possible. Clearly, during the past 2 or 3 years, availability of debt was quite good and quite nice, and the terms were very nice. But we need to take some stock now, and we need to start planning for the upcoming crisis, because it is coming. That should put our portfolio companies in relatively good position vis-a-vis their competitors, because with the crisis there will be also opportunities. We want to be very well prepared to start either acquiring problematic competitors or acquire market share organically.
Alex, what kind of shakeout do you see happening in the region? Can you wrap it for us? What are you seeing for the next 12 to 24 months?
Well, I mean, nobody has a crystal ball, but I think that I'd like to hope and I'd like to believe that we're not going to see the kind of major shock that we saw, for example, post-Lehman bankruptcy. I think if we can, avoid that, you talk about a very different set of outcomes. But I think that there's, in the long run, or even in, let's say, the short to medium term, the feeling is that we live in a more volatile world, and I think that in some ways, you know, people have become a bit accustomed to that sentiment. Market downturns create a different set of opportunities. It creates more discipline for diversified players to divest of businesses that are a drag on their results and their resources. I think it opens up appetite of more conservative investors that find current valuation levels unattractive or you know, not warranted. And I think it also creates the possibility increasingly for it, and this is a trend that I think that we see a little bit already, for somewhat interesting alliances between investors to pursue bigger situations in partnerships with others in order to have a little bit less risk exposure to an individual situation. I think one interesting development that I think could continue in the region is that you see, you know, more PEs working in different structures with founder shareholders, or with corporate buyers, or with family offices. So that's another scenario that I can imagine. But I think, you know, M&A will continue. It's part of the business model now, and I think that, you know, everyone, you know, is still going to continue with their strategy of preparedness for a variety of circumstances.
Very good. Well, I'd like to thank our panelists. I think some very interesting views. I know there's a coffee break coming up in about half an hour's time, and I'm sure that all of you will be interested in following up with them individually. So thank you very much.
Thank you.
I'd like to introduce our next speaker as well, Anthony Moncton. He's the Chief Operating Officer of Vienna East Consulting. He's going to speak to you on risk analysis and risk management in Central and Eastern Europe.